And to the equities market, the Nigerian Exchange Limited all-share index and market capitalization increased by 0.74% on Monday to close at 65,202.41 points and 35.68 trillion naira, respectively, against the previous one. But of course, if you look at the upturn in the market capitalization was driven by price appreciation in large and medium capitalized stocks, amongst which are BUA Foods, which went up by 9.29%, Stanbic IBTC doing 1.74%, Dangote Sugar Refinery. If you take a look at the top gainers there for you, on Monday, you will discover that Square, John Holt, Mansard Livestock were among the top 5 gainer. Dangote Sugar Refinery went up by 2.86%. And look at Nigerian Innovation Handling Company also doing the green there. Flip to the other side now and take a look at what is happening. Tantalizer, Omatech, Jais Bank, Cheap PLC, Cornerstone Insurance were all in the red on Monday. There. But let's get talking now. We have our guest who is joining us to talk about this. Isaac Anyalisi, stockbroker and investment analyst. He joins us via the telephone. Thank you for joining us and good morning.
Good morning, Mr. Frank. Thank you.
Yeah. So yesterday we saw the market open the week on a positive note with 0.74%. Talk to us about this new positive trend in the market. So what's up for grab?
Yeah. Yesterday, like you rightly pointed out, the market gained 0.74% to close at 65,202.41. That's with respect to the all-share index. And we saw the market capitalization also up 35.69 trillion on a year-to-date gain of 27.83%, while the all-share index gained 27.22%. Well, if you look at that result further, you will see that if you look at that market report further, you will see that the number of deals, declined by 6.77%. Volume came down 56.92%, while value also came down 57.50%. So that tells us that it is not yet there seems to be a relatively weak appetite, from investors, as investors are waiting for market direction, waiting for mostly tier 1 bank results, and some other factors, to create stimulus, into the market. Going further, if you look at the sectoral analysis, you'll see that the banking sector declined by 0.35%. Insurance sector gained by 0.41%. For the banking sector, you will agree with me that most of the tier 1 banks, such as Bennett, such as Access Bank, such as GT Bank, Stanbic IBTC, are yet to release their half-year results, and the market is waiting for those results in order to for portfolio managers and high net worth individuals to be able to realign their portfolios much more properly. The consumer goods sector gained 4.97%. To me, that's telling us that equities in that sector has bottomed out. By that I mean that their prices have reached the bottom following the releases of their half-year earnings, where most of them suffered foreign exchange losses as a result of the devaluation of the domestic currency. So that's the picture there. Companies like Cadbury, Guinness, Nigeria Breweries, and Nestle, were among the sector stocks that released their results and that also suffered from foreign exchange losses. So to the extent that prices have bottomed out, it's expected, it is reasonable for us to see, investors wanting to buy into those stocks at their low prices in order to average down, because some of them must have bought those stocks, like in the case of Capri, when the prices were high, sometimes around 20 something naira, and the price coming down to around 16, 14, 15, 14 naira. Investors want to move into those stocks, in order to reduce the average price at which they bought originally. So some of those factors will kind of, play a significant role, in that sector performance. With respect to oil and gas, it is flat, telling us that the impact of the subsidy removal and, of course, the 3 billion borrowing from Africa Bank, is yet to begin to manifest. In the industry.
Okay, let's wrap up this way because of our time. Just give us one. We saw intervention in the forex market with the $300 billion that was, injected in forex market. Did we see any impact of that? Was it reflected? Was the impact reflected in the activities in the stock market? That is one. So, and I want us to also give us an outlook into today's or for the rest of the week, what is likely to play out. We see the ministers are already, have taken their office and they have resumed yesterday working. How is that likely to affect, activities in the market going forward?
Well, what do I say here? At the nexus of nuances surrounding the market, a number of issues, will play out. First and foremost, to answer your question, the injection of $3 billion the loan from African Bank will definitely, certainly impact in the capital market. But then our transmission mechanism is not as sharp, so to say, as you have in most advanced economies. And that could also be attributable to regulatory hiccups in policy implementations and the time lag between policy announcement and, of course, implementation. Now, you would expect that to reflect if, assuming before now, the ministers have been appointed, but you have a situation now where ministers have been appointed, they've been inaugurated, and I think today is their first day in office, and they need time to be able to drive policies, as to be able to positively impact the economy and impact on the market. So this other question you asked, that is looking at the scenario today in the market outlook for today. Well, mixed sentiments. The mixed sentiments will continue to be sustained, until some of this policy thrust of government begin to penetrate the market. And don't forget that this week there's going to be treasury bill offer of about 303 billion both through the primary and secondary market. So depending on how that goes, depending on the spot rate and depending on how investors react to the fact that currently inflation rate is at 24.08%. So when you benchmark that with whatever the treasury bills is offering, you'll be able to see how investors will react to that. So investors' reaction to treasury bills will also have a way of impacting on activity levels in the capital market. So on the balance, we expect to see cautious activity in the capital market.
Okay, I think a good place to leave it. Thank you. Always a delight to have you, Christian Isaac Anyalesi, stockbroker and investment analyst. We appreciate your time on the program. Have a great day.
It's my pleasure, Frank. Thank you.
You'll be watching Business Breakfast. Coming up next, precisely 84 days following his inauguration, President Bola Tinubu's administration initiated its cabinet on Monday, charging them to serve the interests of Nigeria and not the interest of their state or region. That's our focus in the first part of what's coming next. And Nigeria's federal government seems to have become noticeably silent following the initial enthusiasm sparked by its early pro-market statement, which indicated a move towards opening up the foreign exchange markets. So we will also take a look at the impact of the $3 billion intervention in the forex market and how investors are reacting to that move. And finally, oil prices edged lower on Tuesday as the market waited to see if Iraqi export through the Sehan oil terminal will resume, which could ease the supply tightness caused by the OPEC Plus cut, while a faltering Chinese economy weighed on the outlook for demand. Well, those are some of the things to expect on the program going forward. Let's take a break now. We'll get talking in a moment. Stay with us. This is Business Breakfast.